far enough. Venice, Italy. Sorry, please excuse my accent. Today we're going to go over some of the best Bitcoin price indicators and trading signals and explain what they are and how to use them. But first of all, I need to make it clear that these are just signals and might not always work out the way you expect. So don't rely on any one indicator and just use them for what they are, small insights on the market. And before we get into this video, I have some trivia for you. Do you know where Doge first originated? I mean first originated. That's right. Venice, Italy. A Doge is the elected leader of the Venetian Republic. They used to symbolize a balance of power and democracy in their historical governance system of the local area. Anyway, now we've covered the history lesson, let's get into the indicators. The first indicator we're going to talk about is the Active Address Sentiment Indicator, or AASI. This is a tool that compares how much Bitcoin's price changes over 28 days to how much the number of active addresses change in that same time. In other words, it shows us if Bitcoin's price moves are actually supported by how many people are using it. Think of it like this. If Bitcoin's price shoots up a lot more than the number of people actively using it, that could mean the price is overhyped. It might be driven by speculation, not real growth. On the flip side, if the price drops more than network activity suggests, it could be a sign that Bitcoin is undervalued and there might be a good buying opportunity. For example, if the price of Bitcoin is going up, but the number of people using it isn't increasing by much, it could mean that the price won't hold up for long since there isn't enough real use behind it. Another important thing AASI can help with is spotting divergence. Divergence happens when the price is going one way, but network activity is going the other. For instance, if the price is rising, but fewer people are using Bitcoin, it's a warning sign that the rally might not be real and a reversal could be coming. By watching for these moments, you can decide when to buy or sell with more confidence. Now let's talk about the Fear and Greed Index. This is a really popular way to get a sense of what the market is feeling. The index gives us a score from 0 to 100 that tells us whether traders are acting out of fear or greed. When there's a lot of fear in the market, it might be a good time to buy because prices could be lower than they should be. When there's a lot of greed, it means the market is overheated and prices could be ready to drop. The Fear and Greed Index looks at a bunch of different factors to figure out its score, like price changes, trading volume, social media buzz, surveys, Bitcoin's market dominance, and even Google search trends. If there's a lot of volatility, that means traders are feeling nervous and there's fear. If prices are stable, it means things are more relaxed. Social media buzz can show if there's hype or worry, and when Bitcoin's dominance is high, it shows Bitcoin is leading the market. Google Trends also helps us see if people are suddenly interested in searching about Bitcoin, maybe because they're scared or because they're excited. If you see the index showing a lot of greed, like a score above 80, it might be smart to be careful or take profits if that's according to your investment plan. People tend to get overconfident at times like this, which can lead to a correction as many traders try to take their profits at the same time. On the other hand, when the index is below 20, that might mean there's a lot of fear, which could be a good time to consider buying because everyone else is selling and prices are down. Next up, we have the advanced NVT Signal. NVT stands for Network Value to Transactions, and it compares Bitcoin's market value to how much value is being moved around in transactions. In simple terms, it helps us figure out if Bitcoin is overpriced or underpriced based on, again, real activity. A high NVT signal means that Bitcoin's value is a lot higher than the activity on its network, which often suggests that the price is too high. This can happen when people are buying because they think the price will keep going up, not because there's real use. Again, speculation. On the other hand, a low NVT signal means there's a lot of activity compared to the market value, which is usually a sign of a healthy, undervalued market. For example, if NVT goes up a lot during a price surge, it might mean that the price could drop soon since it's not being supported by real usage. By using the NVT signal along with other indicators, you can get a better idea of whether the price makes sense and whether it's the right time to buy, to hold, or to sell. Now we have the net unrealized profit loss, or NUPL. It's a tool that helps us understand whether Bitcoin holders are in profit or loss overall. It shows us if people are making money or losing money based on the current price compared to when they bought. When NUPL is positive, it means most holders are in profit. This can lead to selling pressure because people want to take their profits. If NUPL is negative, it means a lot of people are at a loss, and that can lead to panic selling, creating an opportunity for others to buy in at lower prices. For example, if NUPL is really high during a bull run, it could mean that a lot of investors are making money and may soon decide to sell, which can push the price down. On the other hand, if NUPL is negative and people are scared, it could mean that the worst is over because most people who wanted to sell have already done so. This could be a signal that the market is close to bottoming out, making it a good time to think about buying. The Relative Strength Index, or RSI, is a tool that helps us see how fast Bitcoin's price is changing. It gives a number between 0 and 100 and tells us if the market is overbought or oversold. If RSI is above 70, it means Bitcoin might be overbought and the price could drop soon. Overbought means there's been too much buying and the price might not be able to stay that high. If RSI is below 30, it means Bitcoin could be oversold and might be a good time to buy because the price could go up from there. For example, if RSI goes up to 75 when the price is rising, it might be a sign that Bitcoin is about to pull back. So you might want to take some profits or at least be cautious. If RSI falls below 25 during a sell-off, it might mean that the price has fallen too far and it could be a good opportunity to buy. Using RSI with other indicators helps you make better decisions about when to get in or out of the market. Open interest is a total number of open contracts in the derivatives market, like futures or options, that haven't been closed yet. It shows us how much interest there is in trading Bitcoin and how many people are getting involved. If open interest goes up while prices are rising, it usually means that the trend is strong and more people are jumping in. But if open interest goes down while prices are rising, it could mean that the momentum is fading and the price might not keep up for long. A sudden spike in open interest usually means that investors are confident the trend will continue, but it can also mean you can expect a lot of volatility in the short term. It's also important to watch for drops in open interest because that can mean a trend reversal might be coming. If people start closing their positions quickly, it could mean they think the trend is about to end. By keeping an eye on open interest, you can get a better idea of what's happening in the market and make more informed choices. The last tool we're going to cover is social sentiment. This looks at how people feel about Bitcoin by analyzing conversations on social media, forums, and other online spaces. In the crypto world, emotions can drive the market a lot. So understanding what people are thinking and feeling is really important. When social sentiment is really positive, it can mean that people are excited and the price might be going up as more people buy in. But if sentiment is too positive, it could also mean that a correction is coming, since too much hype can push prices up too quickly. This kind of excitement often leads to a sharp drop afterward. If there is a lot of negative sentiment, it can mean that a dip is coming, or it could be a sign that people are getting too scared, which might make it a good time to buy if you're willing to take a chance. For example, if you see a lot of people talking positively about Bitcoin during a price drop, it might mean that they see it as a buying opportunity and the price could soon rebound. Keeping an eye on social sentiment helps you understand what's driving the market and how to adjust your strategy. So that wraps up some of the most popular Bitcoin price indicators. As I mentioned at the start, you need to take them with a pinch of salt and use them wisely. You can't just rely on one indicator, and there is a lot at play when it comes to the crypto market. You know, our position is to just buy and hold. The rest is just noise. And if you want to learn more about crypto and indicators like this, then check out learningcrypto.com. It's our educational platform where we bring you regular market updates, access to our portfolio, and we're updating it all the time with more educational content to help make crypto easy to understand. So thanks for watching today's video. Stay safe out there. Don't forget to hit that subscribe button. I'll see you next time.